Welcome to the deep dive. It really feels like the world of international finance has entered a new phase. Kind of complex,
It has, yeah. We're seeing tariffs making a big comeback.
definitely. The whole U.S.-China thing, the shifting sands between the EU and U.S., it's impacting how capital moves, how high-value goods move.
Right. And for you, if you're managing assets across different countries, maybe looking at buying a jet or a yacht internationally.
Or even just managing a global art
Yeah,
collection.
exactly. It suddenly means friction. Lots of it.
We're talking duties, taxes, endless paperwork. Moving money, or say importing that yacht, can be really slow and honestly super expensive.
It really can stack up.
But for you facing these kinds of headaches, there's an alternative. It's powerful, often
Yeah.
very discreet, and definitely worth looking into.
Absolutely. Your standard financial tools, they often just, well, struggle with these kinds of unique high-value assets, especially in this climate.
All these complexities with cross-border stuff,
Mm.
the rise in protectionism.
It really just highlights the need for something more agile, for individuals like you.
And that's where these luxury asset loans really come into play. Think about it. Loans secured by your private jet, your super yacht, maybe your fine art collection.
Mm-hmm.
For you trying to navigate these tariff minefields and capital restrictions, this can be a genuine strategic edge, almost like a legal way to bypass the usual issues and unlock capital tied up abroad.
Yeah, financial workaround.
So our mission today in this deep dive is really to show you exactly how leveraging these kinds of major assets can give you that critical advantage.
And what we think is really insightful for you is getting under the hood, understanding the basics of these loans, what makes them tick.
There are key features.
Right. And crucially, how they offer that often missed benefit of sidestepping the tariff problems. We'll, walk through some real world examples for jets, yachts, art, how it actually works for you.
Okay, let's break down the core idea for you. At its heart, this is asset-based lending. Simple as that, really.
Fundamentally, yes.
But the key thing for you to grasp is that it's secured by the actual tangible value of these high-end things. Your yacht, your jet, that investment-grade art. It's not primarily about digging through all your finances or relying heavily on your credit score.
Right. In fact, the credit checks involved are often pretty minimal. It's secondary.
So the basic principle, and this is important for you, is the lender gives you capital based on what your luxury asset is appraised at. That asset is the collateral.
And this is a huge point for you. You keep ownership of the asset.
Right. No sale is happening
You're
here.
just borrowing against it.
And here's where it gets really useful, especially if you have assets sitting overseas. Because you still own it, for the loan purpose anyway, that often means no immediate capital gains tax hit.
Which can be significant, though obviously for your specific situation.
And always check with your tax advisor. Goes without saying.
Of course. But maybe even more relevant in this tariff-heavy world we're talking about. There's often no need for you to physically ship that asset across borders just to get the loan.
Which you can imagine just cuts out a whole layer of potential problems for you right away.
Instantly. And just to hammer home the key characteristics that matter for you. First, it's asset-focused. How much you can borrow. It's mostly about the valuation and the marketability of your specific jet or yacht or art piece, not just your overall balance sheet.
Second, discretion and speed. These are usually big factors for you. This isn't like the typical bank process.
Not at all. It tends to be faster, much more private, often handled through specialized private offices.
And the lenders in this space, the specialists, they get these unique assets, they understand them, and they absolutely understand the need for privacy that often surrounds managing them.
Exactly. Third point, liquidity without selling. You get access to potentially large amounts of capital tied up in these valuable things.
Without being forced to sell them off.
Right. So you preserve those holdings, which might be important long term for you.
And finally, flexibility.
Yeah.
That's key for you too, right? These loans can often be set up as short-term finance, maybe even a line of credit you can draw on.
Very adaptable. So whether it's bridging finance for, I don't know, another big purchase you're eyeing,
Or jumping on a time-sensitive opportunity.
or even just managing temporary cash flow needs, like for yacht maintenance or something similar, it works.
And you mentioned specialist lenders. It's probably worth noting for you that the main players here are often privately held firms, aren't they?
Yes, typically. They specialize in these non-bank loans and really have deep expertise in, the nitty-gritty of lending against high-end luxury assets.
Okay, so now the really clever bit for you. How these loans become this sort of hidden advantage when you're dealing with those tariff traps.
This is the strategic angle.
Yeah. As we touched on, The core benefit for you is that because the loan's secured by the asset,
Yeah.
in situ like, wherever happens to be parked or moored or stored,
Right, where it physically sits.
it lets you essentially bypass the tariffs, the import duties, the capital controls that usually pop up when you try to move valuable assets around internationally, or even just bring back the money after selling something abroad.
It's fascinating for you to think about how directly this tackles some of the biggest headaches in international finance for, well, people with significant assets. It basically disconnects the asset's physical location from the capital flow you actually need.
Let's try and visualize this for you.
Yeah.
Scenario 1. Imagine you need cash, say, in the U.S., but a good chunk of your wealth is tied up in art stored in a European free port.
Okay, common scenario.
Now, if you sold that art to get the funds, you could instantly be looking at export taxes, compliance nightmares, whole mess.
Definitely. But the alternative you have is using that art collection as collateral. And here's the kicker. Without moving it an inch.
Still sitting safely in the free port.
Exactly. You can secure a USD loan against it. The ARC stays put. For anyone unfamiliar, a free port here is like a super secure tax advantage zone often used for storing valuable things like art.
So for you, the art doesn't move. You dodge the customs headaches. You avoid the capital flow rules. It's neat.
Very neat. And it's not just art, right? You could apply the same logic.
Yeah.
Think about your yacht in the Med financing a deal you want to do in Asia.
Or your private jet sitting in the Gulf being used to back an investment you're making in Europe.
Same principle. Huge benefit for you.
Okay, scenario 2 for you. Unlocking liquidity across borders. Let's say you have a jet based maybe in the Gulf, but a really compelling investment pops up over in the EU.
Right. Opportunity knocks.
The usual routes for you. Selling the jet, maybe trying to arrange traditional cross-border finance. That could mean weeks, maybe months of paperwork, plus major regulatory friction.
Slow and painful.
But with a luxury asset loan, a lender with global reach could potentially set you up with a euro loan secured against your jet right there in the Gulf.
And the beauty of it for you, the jet doesn't have to be relocated. No long delays. It's fast, it's compliant, and you get liquidity from that asset without messing up its operational use.
It's just cleaner. And it's not just about deals and opportunities for you, is it? Think about estate planning or portfolio rebalancing.
Oh yeah, absolutely. Say you're trying to restructure a trust or maybe rebalance a portfolio that's heavily weighted towards art spread across different countries.
Just physically moving those assets between jurisdictions can trigger all sorts of unwanted stuff for you. Taxes, tariffs.
Or it might even be treated as if you'd sold it, a deemed disposition, causing more headaches for you.
But the luxury asset loan gives you a pretty elegant way around that. You can pull liquidity out of the assets without actually selling them or moving them.
Which can be incredibly helpful for you if you're a trustee or a beneficiary or maybe an advisor managing these complex multi-country wealth structures.
So the big takeaway for you here is that these loans let you unlock the value that's sitting inside your jets, your yachts, your art, without getting tangled up in that regulatory spaghetti that usually comes with moving things across borders.
Exactly. The location of the value gets separated from where you need the capital to flow.
Right. Let's make this even more concrete for you with a few quick examples. Now, obviously, discretion is key here, so these are just illustrative scenarios.
Sure. Good point.
First up, remember that entrepreneur with the jet in France? Let's say they spot that time-critical investment in the UK.
Okay.
Instead of selling the jet or waiting through a slow international loan application, they secure a GBP loan, pound sterling, against the jet.
Right. Using a luxury asset lender.
Exactly. The jet stays put in France, ready for them to use. And crucially for them, no export or import tariffs get triggered. Clean.
Makes sense. Here's another one for you. An investor, maybe they have a super yacht moored down in Monaco. Suddenly, they need US dollars for a deal stateside.
Right. Getting a yacht into the U.S., even temporarily, involves incredibly complex rules.
Oh, massively complex. So instead, they get a luxury asset loan in USD secured against the yacht itself.
Which stays happily in Monaco.
Precisely. No tariffs for them, no mountains of red tape, just fast access to the dollars they need, probably through a lender who specializes in maritime assets.
Okay, final example for you. Think about a family office. They hold a significant, valuable art collection in a Swiss free port.
Secure storage, low tax environment.
Yeah. And they decide they want to diversify, maybe move some capital into private equity.
Yep.
Rather than selling the art, which could trigger big tax bills for them, they use the collection as collateral for a loan.
The art stays safe in Switzerland.
And they get the liquidity they need to make that private equity investment without messing with their long-term art holdings.
So these examples, whether it's jets, yachts, or art, they really drive home that core value for you, don't they? Discrete, strategic cash access.
Without the border crossing pain and the tariff costs.
Exactly.
So why are we seeing this seemingly growing interest? For you considering this, why are more people borrowing against their jets, yachts, and art? We've talked a lot about avoiding tariffs, and that's huge.
It's a major driver for sure.
But it's not the only reason, is it?
No, definitely not. There's more to it. For one thing, think about traditional lenders, the big banks.
Right.
They often aren't that keen on lending against unique assets like fine art or even yachts, unless maybe you're buying it new from them.
Yeah, they get a bit nervous about valuing that stuff.
Partly. They're generally cautious, their processes can be really slow, and they're very focused on standard credit scoring, which might not really fit your picture if your wealth is tied up in assets.
And that's where these specialist lenders offer something different for you.
Right.
More flexibility, solutions actually designed for these kinds of assets.
Exactly. They understand the nuances, the specific markets for these things in a way a traditional bank often just doesn't.
Then there's the value aspect.
Absolutely. Another key factor for you is that these assets, assuming they're well-maintained jets, desirable yachts, blue-chip art, they often hold their value pretty well.
Sometimes even appreciate.
Sometimes, yes. In stable markets, they're seen as strong collateral, which means it's feasible for you to unlock quite substantial amounts of capital against them without having to sell.
And we mentioned speed, privacy, flexibility earlier. We know these are often priorities for you.
Hugely important for many high net worth individuals. You often need to move fast on opportunities, or maybe manage a short-term cash need discreetly.
Luxury asset loans can just offer much quicker turnaround times.
Generally, yes. Fewer personal financial questions sometimes, less bureaucracy overall compared to a standard bank loan application. That can be a massive advantage for you.
And maybe the bigger picture plays a role too, global uncertainty.
I think so. In a world with shifting geopolitics, changing regulations everywhere, currencies bouncing around,
Yeah.
some clients just prefer the option of keeping their tangible assets accessible, like readily usable, and using them as leverage when needed. It gives you a degree of control, maybe some insulation from all that volatility.
It's also fair to say this lending space itself has matured, right? It's not some fringe idea anymore.
No, not at all. The providers today, the good ones, have serious expertise. They know how to accurately value these assets, how to manage the security side properly.
Like inspections, secure storage if needed, coordinating with aviation registries or maritime authorities, insurers.
All of that. They really aim to make the whole process much smoother for borrowers like you than it might have been, say, a decade ago.
Okay, but before you rush off exploring this, there are definitely some key things to keep in mind. Practical considerations.
Absolutely. It's not automatic. First off, asset eligibility. Not every single jet, yacht, or painting is going to qualify for you.
What do lenders look at?
They do thorough checks. They'll look at the asset's age, its condition, really important current market demand for that specific model or artist, and its history, its provenance.
So for a jet, things like maintenance logs, flight hours, that's critical.
Absolutely critical. For art, it's the artist's reputation, recent sales data, condition reports, that kind of thing.
And the valuation process itself.
Crucial for you. And it takes a bit of time. These aren't houses or cars with easy comps. You need expert appraisals.
Proper specialists.
Yes. Qualified aviation consultants, accredited marine surveyors, respected art specialists. Their detailed valuation is what really determines the maximum loan amount you might be offered.
And speaking of amount, you need realistic expectations about loan-to-value ratios, LTVs.
Yes, very important for you. The LTV is the percentage of the asset's appraised value the lender will actually lend you. You won't get 100%.
Never 100%.
No. Typically, you might see LTVs somewhere in the range of, say, 40% up to maybe 70% or even 80% in some cases. It really depends on the specific asset, how easy it is to sell, market conditions at the time.
Makes sense. What about where the asset actually is? Does that matter?
It can, yes. The location and the legal jurisdiction are relevant for you. Where the jet is registered, the yacht is flying, where the art is stored, because the lender needs to be absolutely sure they can legally secure their collateral, place a lien or charge under the laws of that place.
Right, legal enforceability.
Exactly. And finally, maybe the most important point for you, choosing the right lender.
Who you work with matters.
Immensely. Our advice for you is always to work with firms that genuinely specialize in luxury assets. They need to understand the complex legal side, the specific markets.
And be upfront about everything.
Completely transparent about all the costs involved, the fees, the interest rates, the whole process from beginning to end. You need clarity.
Okay, so let's wrap this up for you. The core idea we've explored is that luxury asset loans offer a smarter path to liquidity when traditional finance hits roadblocks or just adds friction.
It's a way for you to tap into the significant value locked up in your existing assets. Your jet, your yacht, your art collection.
Without having to sell them off, without the hassle of physically moving them across borders, and often without those long, drawn-out bank approval sagas.
And for you, our listener, in this often unpredictable global environment, this kind of financing provides a really powerful tool. It's discreet, it's flexible.
And it helps you stay agile, right? Whether you're chasing a new opportunity that needs quick funding or just need to manage short-term cash flow more smoothly.
Ultimately, it gives you more control over how and when you use your capital.
So, as you think about your own portfolio, those significant assets you hold, maybe ask yourself, what new possibilities could this approach unlock for you in navigating today's complex world?
Yeah. This deep dive really shows how understanding these, niche financial tools can actually give you unexpected leverage, especially when the economic tides are shifting like they are now. Makes you wonder what other unconventional strategies might be worth exploring for you.